Hi guys, I'm Forrester here. Yesterday I read an article in the Wall Street Journal about mortgage rates hitting 6.92% interest. That's a 20-year high. But what would you say if I told you where you could go to get a 3% home loan now? I know it's possible because my daughter just bought her first home and she got a 3.14% loan. Where do you go to get a loan at less than half the market rate? Well, that's what this video is all about. Now, several months ago, I read another article in the Wall Street Journal titled "The One Place You Can Still Get a 3% Home Loan." That's where I learned about the National Family Mortgage Program. My daughter has been looking for a home since they returned from China, but it's a terrible time to buy a house, in my opinion. Home prices are at obscene levels and interest rates are rising very quickly. It makes it almost impossible for a young family to get out of an apartment. The National Family Mortgage Program can't fix high home prices, but it can make the monthly mortgage payment a little more reasonable through lower interest rates. Now, I'm not an expert on this, but I've just finished going through the process as the lender to my daughter and her husband. First, let me give you an overview behind the program. You see, the U.S. government doesn't want large sums of money to be passing among family members and avoiding gift and estate taxes. They want their share of your money. So there are rules about the allowable size of gifts, for instance, before the lender is required to pay taxes. And the taxes can be very significant, ranging from 18 to 40%. There are ways around paying these taxes, but that's for another video. Now, instead of a gift and possible gift taxes, the National Family Mortgage Program, I think, is a good alternative for both the lender and the borrower. It's a win-win situation, in my opinion. Now, why would I want to be the banker for my daughter's first home? And I guess the truth is, I really don't. But I would say the desire to help comes naturally. My grandfather was a farmer and a carpenter, and he built each of his 4 children their first home. He wasn't a wealthy man, just talented and a hard worker, and he loved his children. I think I share that same natural desire to help my daughter. Also, as a saver, there are not a lot of good alternatives for places to invest money right now. In my opinion, stocks, bonds, and even gold are not good alternatives at this point in time. Put your money in a CD and you might make 1% interest if you're lucky. Now, through the National Family Mortgage Program, I was able to loan my daughter money at 3.14% interest, which is less than half the going mortgage rate, and I'll be earning over 3 times the interest that I was getting from the bank. Now, the interest rate is set by the IRS on a monthly basis. In October, the rate changed to 3.43% interest. It's called the applicable federal rate. And there are 3 official rates, a short, medium, and a long-term rate. If you make a loan and charge less than the rates that they quote, the IRS can tax the lender on the amount of interest that they should have received. There are too many details about this National Family Mortgage Program than I can cover in a short video like this. So I'm going to put a link to their website in the description box below so that you can read all the details for yourself. But I will cover the pros and the cons of the program. Now, I've listed the pros and cons out on a piece of paper, so I'll be referring to this as I go through them. I didn't want to forget any. And the first pro I've already mentioned, and that's just that it's a win-win situation for both the lender and the borrower, as I described earlier. So I always try to look for win-win situations, and this is great in that it benefits both of us. The second pro is that if the mortgage came through a bank, there are bank required fees that are added to the cost of the monthly payment, and those fees can be avoided going through this program. It makes that monthly payment a little more reasonable for the borrower. The third pro is that in a worst case scenario, which we don't like to think about, but things do happen, the lender can recover their money through the foreclosure process. Now, that wouldn't be the case for a gift. So a gift, you can give the money, it may get used for the purposes you intended or it may not, but in any case you're not going to get it back. The fourth pro and the last one I listed, are that tax documents are issued annually for reporting purposes, so it makes it easier for doing my taxes. Okay, there were 4 pros. There's also 4 cons. So the first con is that if the borrower went through a bank, the bank might serve as a backstop against the borrower paying way too much for a house. So in today's market, home prices, people are typically offering $20,000-$25,000 over and above the asking price for the house. A bank might say, no, we're not going to loan that. We'll loan a maximum of this amount. That's not exactly the same situation when you go through this process and you're loaning among family members. The second con is that there's always a possibility of a missing monthly payment for any number of reasons. So I will say that there are penalties for missing payments. The payments are automatically extracted from the borrower's bank account and deposited in the lender's banking account. But if those monies are not there, there's insufficient funds, there are penalties involved. The third con is that I'll have to pay taxes on the interest that I'll be making. But you know, that's really not a fair con, because I would have to pay taxes on any interest that I earned from other investments, or most other investments. And the fourth con is that there's always the possibility that my wife and I might need these funds later in life. You know, however, I will say there's different ways of looking at it, and I have calculated at what point the principal would be recovered, and it's well before the loan would be paid off. So those are the 4 main pros and cons that I thought of. The biggest issue that's raised when I've discussed this loan program with other people is that they'll say, but that wouldn't apply in many cases. It wouldn't apply to many people. Well, I got curious and I looked up some numbers on the internet, and I'll just speak in terms of round numbers. But the average American family has $65,000 in savings. That there is a wide range in that figure based on age and income levels. But for instance, 39% of baby boom generation, people like myself, have $250,000 in savings. I'll say that again. 39% of the baby boom generation has $250,000 in savings. So this loan program doesn't apply to everybody, but it could apply to you. I hope that you found this interesting, informative. Read the articles that I pointed out and go to the website and read all about it for yourself if you think it could benefit you. And I hope that you'll post your questions and comments below for others to see. Y'all take care.